Hello everyone, thanks for joining us today and welcome to this educational presentation. Now today I'd like to talk to you about a trending tool that I really know that you've been searching for, because we're all taught at the very beginning of our trading careers to trade with the trend. The only trouble is there are so many different ways to trade with the trend that everyone gets confused, and most of them really don't work. So when we start to trade, we actually look at other short-term trend identifiers and we turn what could be a winning trade or a winning way of looking at the markets into a losing one. For example, let's look at this chart here. This is a weekly chart of the Dow. Most traders looking at a short-term trend would say, listen, we made a top, then a bottom, so we kind of have this V top right here. And I like to watch what this guy talks about on TV, and he says that we've got some major resistance, so the trend is obviously down, right? This was a year ago, exactly this same month a year ago. But according to the trending technique that I'll teach you today, it actually spotted an uptrend signal right here and identified right where it believed the market actually was going to go higher. Now that was a year ago, and that was also 9,200 points lower in the Dow. The Dow has risen that much in 1 year. So this is exactly a year ago on a weekly chart, and I'm going to show you in this chart that there were more chances to identify an uptrend signal with the technique I'm going to be teaching you today. Now the good news is that everything I'm going to be teaching you today is easily accessible with one-click access on the PTS Primo charting platform. It's the educational portal that actually teaches you how to trade with the trend. So welcome once again. My name is Steven Primo, president and founder of Specialist Trading. First of all, I have allergies going today, so I apologize for my voice. I may lose it from time to time here, but I'll do the best I can. Just for those of you who are unfamiliar with my webinars, we give free weekly webinars every week and always try to teach you something. A lot of people, prospective students, always say, well, why don't you just teach us something? Why not just tell us what you think the market's going to do? Well, that goes entirely against our philosophy. Our philosophy as an educator is that the reason why most traders fail is because they're letting someone else or something else make their decisions for them. Now, ask yourself, how do you make your trading decisions? Do you read a daily blog, or you watch the people on TV, or do you look for earnings reports, or do you wait for the indicators to all cross and line up? This is the way most people trade, myself included. When I first started trading 44 years ago, I did the exact same things. The only trouble is there's actually no consistency with those methods. The only way, our opinion, that you can become a consistent trader is by making your own trading decisions, basing them off of sound fundamental techniques and methods that have stood the test of time. So that's the service we provide. All the things I've accumulated in my 44-year career of trading, we teach our students around the world in over 115 countries and in virtually every state in the United States. So hopefully you'll be able to learn something today and then become a student of ours so we can teach you how to become a consistent trader. Now, before we begin, as always, we are first required by law to share this with you, so please take a moment to view our disclaimer. I'm going to share with you a lot of performance results using this trading technique, but please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. Also, all examples are strictly for educational purposes only. Let's pause just for about 5 or 10 seconds to view the disclaimer. Now, since we are an educational company, we provide free education on a daily basis. So if you'd like to follow us on Twitter, there's our handle right there. Every day I post different information from signals that our methods and techniques and strategies have generated, with a little bit of information in detail explaining why, and also some bits of financial wisdom I've accumulated along the way. So there's lots of great free education on a daily basis. So please feel free to follow us on Twitter. Now remember, as I stated, this is I should say, an educational presentation. So we are first and foremost an educational company. If you come in today thinking I'm going to tell you what the market's going to do, if it's going to top out or going to keep going straight up, or if nothing's going to happen for the rest of the summer, you've really come to the wrong place. We don't do that at Specialist Trading. As an educator, our goal is simply to teach you how to trade with the Specialist Edge. This is the same edge that was taught to me some 4 decades ago and what has sustained me, and that's my goal, to really instill that in all of our students so that you can not only just have a couple of good years trading, but maybe a couple of good decades trading. That's really my goal as an educator, okay? Now, since this is a class, ask me as many questions as possible, but we like to do things a little differently here. please wait till the end of class to ask questions. I promise I'll get to each and every one of them. Now, if you think you have to leave early, or if you're having technical issues with your computer at the moment, you can't see or hear me clearly, don't worry, each and every one of you will receive a link to this recording, okay? So once again, if you have questions, we have a good crowd here today. If you came in late, please wait till the end of class to ask questions. With that stated, let's begin today's educational presentation. So I want to start out with something that my mentors taught me when I was struggling tremendously. And here's what they said to me over 4 decades ago on the trading floor of the stock exchange, because that's where I first started out. And even though I had access to what that time was high-speed information and seeing orders placed in my book, I really had a difficult time trading. In fact, my first year or so, I didn't think I was going to make it. I couldn't make any money, and the best thing I could do was break even. So they saw how much I was struggling, and this is what stuck in my mind, one of the first things that they taught me. They said, Steve, it's the easiest thing in the world to overcomplicate your trading. I mean, virtually anyone can do that. It doesn't take a lot of character to add more and more indicators onto your screen. It doesn't take a lot of character to have 3 or 4 computer screens in front of you thinking that that's going to make you successful. Or it doesn't take a lot of character to, follow multiple markets and to have a bunch of phones ringing and TVs on. I mean, that's just overcomplicating things. I know firsthand because that's what I did. But it's the most difficult thing in the world to simplify your trading. See, simplifying your trading means getting rid of all the useless indicators, all the useless information that really hasn't helped you. Think of it. If it really is that valuable, look at your own trading performance. Has it really helped you? Have all these indicators, have all this, blogs or trading rooms, have all these advanced, courses you've taken, have they really helped you? It's because you have to learn how to simplify, and really by simplifying, what my mentors called cutting out the useless noise. So this is what we're going to be talking about today, keeping things as simple as possible, because that's when you start to become a consistent trader. So how does one simplify their trading? Well, by trading with a trend. This is one of the best ways to do it. You will never be a consistent trader, in our opinion, unless you learn how to trade in sync with the trend. Now, we all know this. We're all taught this, Trading 101. The very day we first start to trade, that's what we're always taught. Here's the only trouble. Everyone has a different idea of what the trend should be. For example, these are the most generic of trending tools, okay? Most traders look at indicators. The lines cross out over, or you have these multiple indicators all flashing at the same time, while other traders like to look at patterns, higher highs, higher lows, and vice versa for a downtrend. And still, I would say most traders, this is a question I get on almost on a daily basis, say, well, Steve, I like to look at different time frames. In other words, if I have a downtrend on the weekly chart, well, then there should be a downtrend on the daily chart where I trade, or vice versa, an uptrend. So these are very generic ways to determine what the trend is. Ultimately, though, they'll only get you minimal results. For example, here's an older chart in Zion, okay? Most of the generic tools would say, well, obviously we're in a downtrend, but they mostly wouldn't tell you until somewhere around here. And then by that time, you decide to get out of the market entirely or to take a loss and just say, I'm going to get out of this or I'm going to short it. And then just when you decide to do that, this happens, right? So you see, these tools, these generic tools, indicators, patterns, timeframes, are what we call a day late and a dollar short. Why? Because they're usually lagging. So in order to trade in sync with the current trend, what you need is a tool that translates what the market wants to do on a tick-by-tick basis. You see, we don't want a lagging indicator. We want to know what it wants to do tick by tick. And it's not predicting a high or predicting a low. It's just translating at the very moment what the market wants to do. Guess what? There is such a tool. It's called the PET-D. I was first introduced to this 4 decades ago on the floor of the Pacific Stock Exchange. Now, for those of you who aren't familiar with the PET-D, I've spoken about it for years now, but if you're not familiar, the PET-D is a proprietary algorithm. Why? Because it's a very difficult calculation to do on a daily basis. Trust me, I used to do this 4 years ago, and I had to calculate it, like I said, on a tick-by-tick basis. And by that time, it was too difficult to even see what the market was doing. So we've taken all the hard work out of it for you and translated it into a color bar tool. So you'll see a series of either green or red bars. Now, one of the most prominent and powerful ways to use this is as a signal confirmation tool. So let's just say you have any strategy, any method. Could be something that I've taught before, could be something that you've made on your own or from another educator. But we can use this to confirm whether a signal is going to be valid or not. But here's what we're going to be talking about today as an early trend detector, because it's so sensitive. It determines everything on a tick-by-tick basis. It really tells you the trend better than anything I've ever worked with in my 44 years. It's because it's an early trend detector. Now, let's look at that chart we looked at earlier. Remember, most trending tools are lagging, and they won't tell you until about right here that the trend is down. And then by that time you make a decision, the trend changes. Well, here's what it looks like once you add the PET D. A series of red bars tells you that you're in the downtrend. So we knew well in advance we're in a downtrend. And even though it doesn't predict the exact low or the exact high, it would have told you and give you early warning well before you found out somewhere up here that the trend was changing to the upside. So as it says here, the beauty of the PET D is that it tells you which direction you should be trading. And then once you know that direction, well, then you simply apply any technique to that direction. Now, the trouble is most traders say, well, Steve, I've been trading for years now and nothing seems to work. It works for a little bit, then it just doesn't work at all. So I don't have a strategy, I don't have a technique. Well, the good news is I'm going to teach you a powerful technique today. You can use this technique once you apply the PET D with this. And it's extremely simple. Remember, the theme of today is keeping things as simple as possible, not overcomplicating your trading, but keeping it simple. Well, here's what we're going to show you today. All right, so let's say we want to find out if the market is in an uptrend, okay? Here's the technique, very simple. After a series of green bars, and when we say a series, we mean a minimum of 5. After a series of green bars have been generated, 1 to 4 red bars may appear, okay? Now, an uptrend setup will occur on the very next green bar. So you see, after a series of green bars, we want a maximum of 1 to 4 red bars. We can't have more than that because if we have 5 red bars, well, now the trend is down. So that's the cutoff right there. And when we see the very next bar after that green, that's an uptrend setup. Now, this is a sign that quick upward momentum may continue. For example, we look at this bar here, this chart here in Tiffany. As we apply the PET D, we click it on our platform, and it automatically changes the colors. They're going to be green or red, and they won't repaint. That's a big question that a lot of students say. They say, well, Steve, you know, one day will it be green, and then with more volume and with more indicators and with more data, it turns to red? No, once the bar closes, it stays that color. So we have a series of green bars here. There were a total of over 5. And then we have 1 red, and then here's our first green bar. That is the uptrend signal right here. Remember, after a series of green bars are generated, 1 to 4 red bars may appear. All right, here's our 1 red bar. An uptrend setup will occur on the very next green bar, which is right here. Here's our uptrend signal. So now you can either use this to actually buy at the market, or you can look for any buy setups using whatever strategy you apply. Either way, that was 14 points straight up after that. Now, let's look at the exact same thing if we're looking for a downtrend. It's the same rules, we just reverse them. After a series of red bars, now by series we mean a minimum of 5. After a series of red bars have been generated, 1 to 4 green bars may appear. That means a maximum of 1 to 4 green bars. A downtrend setup will occur on the very next red bar. This is a sign that quick downward momentum may continue. Okay, so let's look at this example here, older example in Oracle. All right, so we have a number of bars. It looks like we kind of bottomed out here, so maybe we're starting in an uptrend, but if we apply the PET D, that is the translator. Remember, on a tick-by-tick basis, we see here that we have a series of red bars, over 5 red bars. And then it's followed by only 2 green bars, and then 1 more red bar. So once again, the rule states that after a series of red bars are generated, 1 to 4 green bars may appear. Well, 2 green bars appeared. The downtrend setup will occur on the very next red bar, which is right here. So that's your downtrend setup. At this point, you don't want to be buying because there's a high probability it's going to go higher. Now, this isn't 100% foolproof, But this is how you get in sync with the market. This is how you increase your odds for consistency, by being in sync with the market and by keeping it simple. So let's say at this point you're thinking about going long. That would be a bad idea because look what happened to Oracle after that, okay? Remember, the key to consistency is trading in sync with the market. Think of it. The reason why you lose money is not because your strategy may be faulty, or it's not because you don't have enough experience or enough knowledge. It's mostly because you're doing the opposite of what the market wants to do. That's another way of saying you're out of sync with the trend. So you know now that you had a downtrend signal here. Now it was followed by one green bar and then another red bar. So here is another downtrend setup, okay? They will appear over and over again until the market decides to change course. All right, so let's look at some recent technique examples using what I just taught you here. And remember, everything you're going to be seeing today is displayed on our platform. The PET-D axis is one click away. You'll only find it on the PTS Primo charting platform that teaches you how to identify and trade with the trend. Okay, so here's a newer chart of Oracle. As you can see here, this was in May coming into June this last month. Now it looks like we went up and we are coming down. So maybe most traders would say, well, we kind of hit some resistance here, so we're in a downtrend, right? Well, what is the translator saying? We apply the PET-D on our platform, click it on, and it's saying the majority of bars here are green, followed by two red bars, and then another green bar. So that's a uptrend setup. So you shouldn't be looking for this to go lower. Most likely we're going to be going higher, and the stock went up 7 points. Now, as you see here, before it really took off, there was another setup right here, a series of green followed by one red, then another green. That's your uptrend setup before it started to go even higher. How about Wish? All right. This was coming into May and then coming into June. Looks like we've made a bottom here and we're going higher. But if we apply the PET-D, what is the translator telling us? Well, it's telling us that the majority of the bars are red. Now we're followed by 1, 2, 3, 4. That's the maximum amount of green bars we can see. And then the next one is red. So this is telling us that the downtrend is going to resume. So this is our downtrend signal. At this point, you should not think about buying anything. Why? Because you'll be out of sync with the market and therefore decrease your chance and odds for consistency. Stock fell a quick 7 points. You see, this is how you become a consistent trader, by being in sync with the trend. All right, as we look at gold, that's the GLD, that's the ETF that represents gold. All right, what do we see here? Well, there's not enough information. Most students would say, well, Steve, I can't make a decision off the trend just by looking at 5 or 6 bars. Well, yes, you can, because that's how sensitive the PET-D is. Once you click it on, you see that the majority of the bars, the series of bars, are red. Now, it's followed by one green bar. All right, now, if we see a maximum of 4 green bars followed by one red bar, well, then the trend will resume to the downside. So let's see what happened. Well, actually, the market changed its mind. It said, you know what? We're now in an uptrend. Why? Because we have a series of 5 or more green bars. So we are no longer looking for a downtrend setup. We're looking for an uptrend setup. But we have to have a maximum of 1 to 4 red bars. So let's see what happened. We had 5, at least 5 here, so we know the uptrend is in place. We have 1 red bar. Now we have to see it followed by a green bar, which it was on the very next one. So that is our uptrend signal. And look, this was in mid-April. Coming into June, we have come up 15 points in gold. Now, do you see why I said in the beginning statements, it's the easiest thing in the world to overcomplicate your trading. Someone looking at gold, trying to decipher what they thought gold would do, would look at all these reports and economic tools and inflation and all these outside sources to tell them what they thought gold was going to do. When someone who was a student of mine would have said, I don't need to look at that stuff. I don't need to overcomplicate my trading with looking at news or blogs about gold or what the economy is going to do. All I need to look at is the translator, the PET-D. And if you missed that uptrend setup, well, guess what? We still had a majority of series of green bars followed by 2 red bars and then another uptrend signal right here. Trading is that simple. It's the trader that makes it more complicated than it has to be. Okay, Let's look at the SPCE, SPICE, or Virgin Galactic. Once again, we have this V type of bottom here. It looks like we're going higher, but if we apply the PET D, the majority of the bars are red. So we have a series of red bars followed by 3 green bars and then another red bar. This is a downtrend signal. I don't care if someone tells you we bottomed out here. I'll let the market tell me, the very thing I'm trading. I won't let an outside source tell me. So the market at this point is telling me it wants to go lower, so I'm not going to buy anything. I'm not going to put in a lower bid or buy at the market. I'm going to look to sell if my strategy or technique gives me a sell signal. And look what happened. Stock fell 18 points. Now, if you missed that one, look, you have 2 green bars followed by a red, 1 green bar followed by a red, 2 more green bars followed by a red. These are all downtrend signals, okay? Here's an example in AMC. We all know that AMC has been the hot topic of the market for the last couple of months. But coming into June, at the end of May and June, it basically looked like nothing was happening. In fact, it was trendless. There was no trend here to the normal eye here, to the way most traders are taught. They said, well, I don't want to do anything until we break out because there's no trend. The market's not telling me anything. Well, yeah, that's because you're following generic ways to look at what the market says. But that's really not based on what the market says. It's based on what an outside source is saying. What is the actual market telling you? Well, the only way to find that out in my 44 years of trading is by applying the PET D. So let's see if there really is no trend here. Let's hit on our PET D tab. And we see here that originally we were in a downtrend because the bars were red. But now that we have a series of 5 or more green bars, even though it looks as if we're going sideways, directionless, we're actually in an uptrend. Okay, so what we want to do is wait for a down red bar and then another one to really click on that we're in a strong uptrend. So we have 1 red bar. We can have a total of 4. Now, if we have a total of 5 red bars, that means the trend has changed back down to negative again. But let's see what happened. Well, the very next bar on the 24th of May, just about 2 or 3 weeks ago, was a green bar. So what is that telling us? It's telling us that we are having an uptrend signal, that most likely the trend's going to really kick in right now. So if you're thinking about shorting this or not doing anything, actually the market is screaming that it wants to go higher. So you may want to get your strategy together, get some type of technique together, some type of entry method so that you can get long AMC. And that would have been a great idea because the stock went up 58 points in the next 2 weeks. Here's an example in KLAC. All right, once again, series of red bars, 2 green bars, followed by another red bar. That's a classic sell signal. This happened coming into May. The stock fell 45 points. And then we had 1 green bar. Here was another chance you could have gotten short. All right, here it looks as if we're kind of going listless, kind of sideways, but look at all the green, red bars. So someone would say, well, Steve, the market doesn't really know what it wants to do because it's oscillating between green and red, right? Well, let's break this down. We start off with the majority of bars green. So that means we're in an overall uptrend. We have 1, 2, 3, 4 red. That's the maximum we can have, but it's followed by a green. So that is an uptrend signal. Now we have 1 red followed by a green. That's another uptrend signal. 2 more red followed by a green, another uptrend signal. 2 more red followed by a green, and yet another. And then lastly, 1 red followed by a green. So we have a number of uptrend signals here. So the market is screaming to us that it wants to go higher, even though at this point it looks as if nothing is happening. And then look what ultimately happened. Coming into June here, the stock was up 90 points. Let's look at that chart we opened the presentation with, the weekly chart of the Dow. Okay? Remember, most traders thought, well, gosh, we kind of made a top here. There was major resistance. That chat room I go to says that the institutions were selling here, so it must mean that we hit a top, right? Well, what is the translator telling us? That's why we don't have chat rooms or trading rooms at Specialist Trading and Pro Trader Strategies, because that would be doing you a disservice. We want you to listen to the market. We're trying to instill in you this mindset of listening only to one thing, the chart in front of you. We don't generate buy and sell signals at Specialist Trading. We don't have chat rooms because, once again, that goes against our philosophy. Everything you need is right in front of you if you have the proper tools. So let's apply the PET D. Let's see what the PET D tells us. Well, we have 1, 2, 3, 4, 5 green bars, okay? That's the minimum of green bars. We have 1 red bar following that and then another green bar. So this, therefore, at the end of June, almost exactly a year ago, was telling us this is an uptrend signal on a weekly time frame. So as we see what happened for the next year, the Dow rose 9,200 points. Now, if you missed that, we have a majority of green bars here, followed by one red, and then another green. That's another uptrend signal. One red, another green, another uptrend signal. So it was giving us uptrend signals all along the way, coming into June here. Now let's look at some other markets and some other time frames. We don't want you to think that we can only apply this for stocks. This can be applied to a 4-hour chart of the British pound Swiss franc, all right? Someone looking at this would say, Steve, absolutely no trend here. We're kind of just going sideways. Maybe we bottomed out. Maybe there's some support. But what is the PET D telling us? We click that on the platform, and the majority of bars are red. One green bar followed by another red. That is a classic downtrend signal. So at this time, if you're thinking about going long the pound Swiss franc, we probably suggest not. It's up to you, but the market is telling you it wants to go lower. And in the next 2 days, the pound Swiss franc fell 110 pips. That's roughly $1,000 per unit. And there was another setup right here. How about this 5-minute chart of the E-mini? This just happened, I believe, last Friday on the 11th, okay? Once again, looks as if the market is doing absolutely nothing, right? Now, this is a 5-minute chart, but let's apply the PET D. The majority of the bars to start out with are green. Then we have 1, 2, 3, 4 red bars, so that's the maximum we can have. If we had one more red bar, then the trend would change to down. But look what happens. It went back to green, another red bar, back to green. So these are 2 uptrend signals using this technique. Think about getting long. If you wanted to, you could buy at the market. Remember, that's up to you. This is not a strategy or a system. It's simply a technique. You would still have to put some money management or some entry rules in there. But the market's telling you at this point right here, it wants to go higher, and it went up 8 points in the next hour. That's only $400 per contract, but let's say you had 10 of them. That's $4,000 in an hour. That's how simple it is trading with this. And then lastly, remember at the beginning of this month in June how Bitcoin was really falling out of bed? A lot of people were saying, wow, Bitcoin just keeps going lower and lower. Well, it makes no difference what the market is. It makes no difference what the time frame is. Looking back in hindsight, how could we have captured this downtrend in Bitcoin? All right, same thing. We don't change anything because we're looking at a different market. We click on PET D. We see here that we have 1, 2, 3, 4, 5, 6, I believe 7 red bars, 2 green bars, followed by a red bar. That is a downtrend signal. So we knew on the 5th of June that Bitcoin wanted to go lower. And if we missed that, there was another down signal here on the 7th. Now, had you taken either 1 or 2 of those, that was close to 5,000 points to the downside, okay? So if, let's say you were long Bitcoin, this would have been a good chance to get out, save yourself 5,000 points, or if you wanted to sell, it's entirely up to you. Okay, let's recap real quickly. Remember, after a series of green bars, by series we mean a minimum of 5, after a series of green bars are generated, 1 to 4 max red bars may appear. An uptrend setup will occur on the very next green bar. Conversely, after a series of 5 max red bars, or 5 minimum red bars, I should say, are generated, you see 1 to 4 maximum green bars appear. A downtrend setup will occur on the very next red bar. Now, extremely important to remember, I did not just give you a trading strategy. In order to give you a trading strategy, which I talked about in some other weeks before, I've talked about strategy 4, strategy 10, strategy 5. Those all come with the complete pieces of the puzzle. In other words, they come with advanced entry signals, telling you exactly where to enter. They also come with stop placement, telling you where to get out if it happens to not work out, because not everything works out 100% of the time. A strategy will also come with advanced exit signals, telling you where to exit with a profit. And then lastly, if you're trading a strategy, you're going to have money management rules. All right, you're going to know how many shares to trade, how many contracts to trade, if you want to track the trade with stop loss orders. Okay, this is all part of what makes up a strategy. But we didn't talk about that today. All I shared with you today was just one of those, and that was just a trading technique. The technique is different in that all it does is it highlights exactly where a high probability setup is. But it's still extremely powerful, as you just saw with all the examples I shared with you today. Now ask yourself, in just a couple of weeks, We're going to be halfway through 2021. Do you think this trending tool can help your trading for the remainder of the year? Now, I just shared with you one of the techniques that the PET D, I should say, can be used with. There are literally dozens of techniques to apply with the PET D. So do you think this can help you for the remainder of 2021? Well, if your answer is yes, and most likely it is, we have a great attendee discount for all of you taking your time out to come hear me speak today. We're going to offer you our special roadmap for any market. That's the PET D. You're going to get our proprietary color algorithm, okay? You're going to get also included with that 2 more continuation trading techniques. You're also going to get 2 pullback trading techniques, a trailing stop technique. And remember, the beauty of the PET D is you can apply it to any market, any time frame, and any direction. Now, here's the important thing. Everything you saw today was used by applying this on the PTS Primo charting platform. We specifically developed it, ProTrader Strategies and I, to make it simple. You notice on the platform, all you had to do to click on the PET D was just click on the tab, the upper green strategy tab, and the colors automatically change for you. So here's what we're going to do. Today only, we're going to give you actually a full year of the PTS Primo chart free. The platform is just such a great piece of work. It's taken me over 44 years to accumulate all the things on the platform. You're going to get a full year free, included with today's promotional offer. Now, you're not just going to get the PET D on the platform and that's it. We're also going to throw in, along with a one-click PET D access for the short-term trend, you're also going to get our enhanced buy-sell line. Those are 4 features. That's for the overall trend. You also get a tool I developed with ProTrader Strategies. It's our strength of trend indicator. This tells you many times when a trend is running out of steam, and you can apply this with the PET D as well. You'll get our signal scanner. You can scan for the PET D. Over 90 of the most prominent technical indicators. Auto-generated exit levels as well, along with personalized tech support. Now, there's so many more things included on the platform. Just don't have time to go in, but there's so many things I've accumulated from my 44 years that are on the platform, and you won't find anywhere else except on the PTS Primo charting platform. All right, so let's break down. What is this great offer we have for you today? Well, normally, the PET D course and application would cost close to $5,000. That's how powerful it is, and that's how well it can help you, okay? Now, if we included the full year of the platform, which we are going to, and we gave you, and we put in the price with that, we would bring the price up to close to $6,200. So this is how much worth we have in these 2 things. But don't worry, we're not going to come anywhere near to offering it at this price. In fact, we're going to discount it close to $2,200. For a limited time only, we're going to offer this for $39.95. Now, if that's still too much, if saving $2,100 and $64, I should say, is too much for you, well, you can still become a course member by establishing a payment plan. What this means is for a small deposit, you can still be up and running and have monthly payments associated with it. And you can be up and running as early as today. All you have to do is come up with a small deposit. You can still be a member of the PET D course and still get that full free year of the platform. So this is a great discount. You're going to be saving over $2,100, okay? Now ask yourself, has your trading been suffering? Are you not seeing the type of results you really wanted? Take your trading to the next level. Become a student of the PET D course. I use this every day in my personal trading, and I continue to use it. And so learn from someone who uses it in their own trading as well. All right, here's how to take advantage of this great offer. Contact ProTrader Strategies. They're my sister site. They offer all the discounts and all the promotions, and they're also in charge of the tech support with the platform. You can email them at the address there, or I would really actually suggest calling them directly at 310-598-6677. Any of the trading consultants manning the phones would be happy to answer any questions concerning the platform or concerning tech support. And as well, they can give you and establish you a payment plan. And there's no obligation. They can give you a quote. So they're not going to try and sell you anything. So don't feel obligated to purchase. You just want to get information. But trust me, most of the people that do call are satisfied after they watch the video again. They want to take advantage of this great offer. Remember, what we're offering you today is usually worth close to $6,200. We're discounting it at nearly $2,200, okay? And we're also offering that payment plan. So if you have questions concerning that, don't hesitate to call Pro Trader Strategies. They would be happy to work with you. They're very flexible. And remember, there's absolutely no obligation to give them a call. All right. Now, that link you see at the very bottom is the link that will take you to the information and sign up page. It's not a live link, but they've posted a live link in the chat box. So all you have to do is go to the chat box and click that on, and the page will appear. Now, if you have any questions concerning what I just went over and taught today, now's the time to ask. Just go to your question and answer box and they go to webinar column, and I'll answer them to the best of my ability, okay? Okay, let's see. In a similar presentation last year, you recommended 1 to 3 bars. Is 1 to 4 bars a more reliable technique? Yes, things are always changing and always evolving, and we have found out that many times, in fact, actually students pointing this out to us, many times 4 bars may be even better because you want to give yourself that extra, bar just in case you don't miss it. But remember, none of these are systematic. We don't teach nor do we trade systems, meaning that nothing is written in stone. So if you'd rather only use the 1 to 3 bar technique, that's up to you. That's fine. You'll still have a nice level of consistency with that. If you'd rather be more conservative and wait for 1 to 4, that's just as fine always. Remember, we're not teaching you how to trade and that's telling you the way so many other websites do, saying you have to buy here, you have to sell here, you have to exit here. That's not what we believe in. Remember, as I said earlier, our goal is to instill these techniques and have you learn from them so that you can ultimately make your own trading decisions. This is the only way you become a consistent trader. So it will require some work on your part, which means that you have to study and research to see which is best for you. But that's okay. That's what will, by putting the work in, you'll get the results you want. So if 3 bars is fine enough for you, that's fine. If 4 bars makes you feel better, that's fine. Okay? Good question. Someone is asking about personal mentorship. Well, when we say educational correspondence, that's not really a personal mentorship. It just basically means you'll get my private email address and you can contact me whenever you'd like. Okay? So when we said educational correspondence is also included, that's just basically you'll be able to correspond with me whenever you'd like. Okay? Now, people who are not students of mine really can't ask me questions because that's reserved only for students. But once you become a student with any of our programs, with any of our courses, you'll get my personal email and you can email me whenever you like. So let's just say over the weekend, let's just say you live in Europe and there's a time difference of 9 or 13 hours and you're studying the work and studying the techniques and you have a question and you say, wow, I don't understand what this means. Let me email Steve. That's perfectly admissible. Email me whenever you like, and as soon as I'm free, as soon as I see it, I will try to answer your question as early as I can. So that's one of the things you get as a student of mine, okay? You will always get to contact me whenever you'd like, okay? Someone is asking, what if we want to use our own platform? Well, you're always free if you want to. You can apply this to the major platforms such as TradeStation, Metastock, MT4, Sierra Charts, NinjaTrader, even Thinkorswim with a few alterations. You can apply it there. The only trouble is you won't get all the extra available things that are on the platform. First of all, you won't get the ease of use that we have on the platform because mostly if you're applying it on another platform, you'll have to open up the indicator box, look for the PET D, scroll down through tons of indicators, click it on, most likely click on green or red. It's up to you. And then because of the way they're formatted. And then by that time, you may have missed the setup. With the PET D, it's just one click away, and then you're right there, okay? And on top of that, with other platforms, you won't get what's also included, such as our overall trend tool, the buy-sell line features. You also won't get our automatic signals generated for exit levels. You also won't get the scanner. So sure, you can use it on another platform, but we highly suggest you use it with this platform since you're getting it a full year free. And it's really so much simpler. I mean, students are always telling us all the time how simple and easy to use our platform is. Okay, so I would suggest what most students do is get the information from our platform and then toggle on to your other platform to enter your orders. Okay, that's what I do. So it's very simple. Okay, good questions. If there are no further questions, I just want to say once again, there is absolutely no obligation. If you'd like to have some more information concerning pricing or concerning establishing a payment plan, contact Pro Trader Strategies at 310-598-6677. The trading consultants will answer your call and they'll be happy to work with you. There's no obligation. They would give you a quote and they're there to help you. So don't feel obligated that you have to purchase something right off the bat. Most likely, they give you information that will, make you feel much more comfortable, and you'll be able to make your decision in the next couple of days, okay? All right, as we close here, I just want to say thank you so much for attending. As we look one last time at our disclaimer, thank you for taking time out of your Wednesday. I hope you're doing well in the markets, but if you really want to take your trading to the next level, I look forward to all of you becoming students of mine in the Pet D course. Thank you so much. Have a great day, and I'll see you next time. Bye-bye.